Let's begin with this investment plan, $180 billion. It's a lot of money. Where exactly is that going to be spent? We have a broad idea that it's about electrification and software and digitalization. Can you give us a little more clarity on where that will be spent?
Thank you for having me here, Oliver, this morning. Yeah, the 180 billion is really a lot of money, but taking into account the size of our company, we are one of the biggest companies in our industry with a lot of fascinating brands, and first and foremost, it goes into products. If you distinguish between ICE and BEV models, more than 2/3 of the investment goes into electrification and digitalization, basically in electric cars, great electrical cars for our brands. Then we are transforming plant by plant to electric, and we are also investing in battery and upstream technology, because we think having the right batteries secured, basically both in terms of supply and in terms of pricing, this is one of the decisive factors in our industry going forward. So this is also the reason why we invest also in battery, for example. Yeah.
Right, your announcement in the last 24 hours gives us an idea of where that money will be spent. 180 billion, how will you fund that?
I mean, first and foremost, we want to fund it by ourselves. Yeah, we have strong cash flows, we have a huge net liquidity. If you look on our net liquidity on our automotive industry, it's on our automotive business, it's 43 billion. Basically driven by the very successful Porsche IPO last summer, but 43 billion is really a very solid cash flow from where we can also net liquidity from where we can also finance this.
What are you finding about pricing power across the brands and what it tells you about the market right now?
If you look onto our results in 2022, we achieved really robust results in this difficult environment, and one of the pillars was a strong pricing, was strong mix, specifically on our premium brands like Audi, like Bentley, Lamborghini. And it shows the strengths of our brands and also the product substance. And we are rather confident that going forward we can keep that pricing momentum, although we expect competition will become tougher. Demand is slowing down, as supply with semiconductors is improving, so we also prepare for more competition, specifically in the Q3, Q4 of this year.
And so you mentioned some of the luxury brands where the pricing power is. Are you finding, just because given the inflation situation with consumers being hit, obviously that's not going to hit necessarily the Lamborghini buyer, but the more mass market vehicle, are you seeing that at all in how people, in the cars people are buying?
No, you are right. We have to prepare for much more competition. Since we have the demand is slightly slowing down, and basically the supply with semi is improving, so we have to prepare for a tougher competition, specifically in our volume brands. So we have to keep pricing and fixed cost discipline, and we have to work on productivity, because we can't pass on all these inflationary situation to the customer. So we have to basically compensate by ourselves as well.
When do you think that the reopening and the material kind of return of demand is going to hit? When is that going to materialize?
We had the overall market was difficult in China for the first 2 months, but our planning is that we are confident that overall in 2023 China market will grow, not double digit, but it will grow 4 to 5%. This is our projection, and it's picking up in the next month.